All right, YouTube, welcome back. This is part two of what is accumulation, manipulation, and distribution. And in this video, we will get into live examples of what is accumulation, manipulation, and distribution. I did not pick out, perfect examples for this video. I kind of just wanted to go through and show you that this pattern sets up anytime, all the time. Now, obviously, you want to pick certain criteria. Like if you're only going to trade Asian session, you're only going to trade London, you're only going to trade New York, you're only going to use this type of pattern within the lower time frame, things like that. You want to have criteria to refine how you enter, but you can utilize this pattern to build a strategy around, which is what I'm trying to show. I personally trade from New York session, which is 9:30 to noon. You can also consider it from 9:30 to like 4, but I always just do 9:30 to noon. Although a lot of moves do happen from 1 to 4. I just personally don't trade that. But anyway, if you haven't seen the last video on what is AMD, definitely go check that out because it just explains what's going on here at a higher level. It explains just more of the concept behind it and doesn't get into any live examples. I did want to show you all this example right here though. Now this is a perfect example that I have up on my screen. Showing accumulation, manipulation, and distribution to the downside. This was a great trade that I took on Friday. I'm not going to get into much of the details of the trade, but we can definitely get there at a later date. Just want to stay very focused on AMD at this point. So we can see here though, we have this large accumulation, price just going sideways. Anytime you see price going sideways like this, not much volume, that's going to be accumulation every single time. Now, price drives right up to the upside, taking any sellers here out of the market. As soon as we do that, price immediately starts driving downside, which we would call distribution. And over here, I was able to find some entries on the 1 minute time frame, just to take advantage of this distribution leg right here. And so that's another way to take advantage of this strategy. Once you see accumulation, manipulation, and distribution occur on the higher time frame, now that you know you're within that distribution phase, you can go on the lower time frame and just find entries in that same direction. So there's many ways to skin the cat. This is just one of those ways, but this right here is a prime example of AMD. We have the accumulation phase right here, then we manipulate upside, and then we immediately drive towards the downside. Now, we don't have any imbalance in this distribution phase until we get to over here, and you see over here is where I took advantage of the pattern we have here. But anyway, I'm going to cut over to the part 2 of this video, which we get some more live examples. We'll go on the daily time frame, and then just drop down to the 4, the 1, the 15, and I think the 1 minute as well, just to give live examples. But hope you enjoy, and thanks. But it's not really that. But anyway, so those are the definitions that we have. So let's delete those and actually just get into real chart examples. And we're going to go from the daily down to the 1 minute. We might not do the 2 minutes, maybe not the 5 minute, I don't know, we'll see. But I definitely want to just show you guys that this repeats over and over again within the market. So let's see, where do we have our first accumulation, manipulation, and distribution? So the first one that's sticking out to me is honestly this structure right here. Now, it's not finished yet, it's not complete, but it could be possible accumulation, manipulation, and distribution. And actually, it might be. So we have this right here. We can call this our accumulation. I guess I'll do like an A. A for accumulation. This whole area right here, how price is just kind of bunching up, not really moving too much, just staying within its own channel. I'll call that accumulation all day long. And then our manipulation, we are going to take out these sellers that probably have stop losses above here, thinking price is going to go down. It's going to respect this swing high, going to respect these highs here. We're going to go to the downside. So we take out these sellers and then immediately distribute to the downside, and which allows us to take price further. Now, as you can see, we have imbalance in this area here. So if you wanted to, you could have an entry right here. You could have an entry right here, and just see how that plays out for you. Now let's get into another example. Let's get into a little bit of a smaller example. So right here we have the same kind of thing. Price is bunching up, it's bunching up, or price is bunching up here. We go to the upside for a little bit, but then we come right back to the downside, and then immediately with this volume. So this volume, this distribution here is the key. So we accumulate a little bit, drive us to the downside, manipulate, take all of these buyers out. All these buyers are thinking these points are going to be upheld. We take them out, then we immediately distribute to the upside, come right back down, and then price is just gone. So let's mark that up. We would call this our accumulation. We would call this our manipulation. And then distribution here. And you could, and to usually have a lot of imbalance in this area like this, I like to enter like on the breaker, which we can get into breakers at some point, not today though. And then you can take this to the upside. Now, you may not want to go for 2R on a daily trade. It's a lot. I don't swing trade personally, but you can take advantage of that there. It would be a good position. And honestly, you definitely gotta secure profits along the way when you're in such a long trade like this. So that is another possible entry. Now let's find one more. Right here, I would say right here. So we have accumulation again. Price is just kind of bunching out. There's not that much volume. And we're going to go to the downside. Taking out any buyers that may have been thinking these levels here are going to be upheld. The price is immediately going back to the upside. And you can see we just kept going. So let me draw this out. We could call this area our accumulation. We would call this our manipulation. And then we're going to call this our distribution. And so, again, like I say, I like to enter when there's multiple imbalances to take advantage of. I like to enter on what the breaker is. The breaker for this area would be here. Again, we can get into breakers kind of at a later point in time, but this would have been a very solid trade. And this is on the daily time frame, mind you. This is pretty high level. And I mean, this entry was a while ago, but again, we're on the daily time frame, so of course this kind of stuff here would happen. So let's drop down. Let's drop down to the 4-hour time frame. See if we can get some decent examples of this same principle, just repeating itself over and over again. Let's see. It's 4 hours, interesting. seeing here, this area here. Yeah, we can use this area here. It's not the best example. But like I said, I want to find examples on the fly. I don't want to, cherry pick the perfect example for you guys just to show you. I want to just find it and talk about it. Regardless of how good or bad the example might be, because when you're trading in the markets, you're not going to have these perfect examples to take advantage of. You're not going to have these, the just exact perfect entry. Now, obviously, we trade to criteria. We trade to a set of criteria. We don't trade outside of our strategy and whatnot. But every setup looks different, and some setups look better than others. It's not to say that your setup isn't valid just because it doesn't look like the perfect setup. But sometimes some trades are just absolutely textbook, and other times trades are a little bit more tricky. You got to pay a little bit more attention to what's really going on here. But anyway, so again, we see small volume going on the lower time frame. We probably have buyers just sitting here seeing that price should go upside, especially based off of this extreme push that we had here. And so we could call this our accumulation. Call that our accumulation, all this bunching of candles right here. This to be the manipulation, because price is driving down, taking these buyers out. And then the distribution will be this move here. Again, we have imbalance in this move, and so we are gonna go to the upside. I like to take 2R on my trades, so that's an easy trade. You could have gotten there, and then it's not bad. So now let's actually get off of the 4-hour. I'm not liking how the 4-hour looks in terms of finding accumulation, manipulation, and distribution. Now you can find it on any time frame, as we just did, but it's not looking the best on the 4-hour. So let's go with 1 hour. Let's see what we can find on the 1. And I'm already seeing this here. Also this here. Even this here. This isn't done yet, but this looks like a good little entry here. This too, actually, this is a great entry. So we have a lot of advantages on the 1-hour time frame. So let's hone in on this one. So again, accumulation, low volume, very low volume. We have push to the downside to take these buyers out that may have stops here, and immediately push the upside then and run. So it's the same thing over and over again, any time frame. This is why I say this is not an exact strategy video, but these are just things that you can watch out for and take advantage within your own trading. So got the manipulation here, then we have the distribution, and boom, we could have, there's no imbalance here actually. We're seeing there's no imbalance here, but on the lower time frame there likely is. Same principle, but no imbalance. So now let's find one that does have some imbalance. So we could say, we could go this here, we could use the accumulation, we could use the accumulation here, then manipulation here, and then distribution, of course, would be here. We do have imbalance, hasn't quite played out yet, but this is looking good to go to the upside. I'd be curious to see how this plays out. We'll definitely revisit that. So let's see, let's find another one. We could use this here too. So again, accumulation, we see this bunching of candles, low volume, manipulation, come up, take out any sellers that may be resting here, maybe thinking, oh, we have great bearish action, so price is gonna go downside from here. It is gonna go downside, just not quite yet. That's why we call it the manipulation. And then distribution, price immediately falls to the downside after taking these sellers out in this area, and then we sink off. It takes a while to sink off, but it's the hourly, so of course it did. And it's a great trade. So let's go down to the 30-minute. What else do we have here on the 30-minute? It's the same hourly trade. Let's actually go down to the 15. Probably not much difference between the 15 and the 30. I mean the 1 hour and the 30. So let's just drop it down 2 time frames. No worries there. Let's find the next one. We could go here like this. Now sometimes your accumulation range is gonna be a little short. It's gonna be a little short. That is to be expected, especially when we get down, to the 15, 5, 1 minute, things like that. That's to be expected. And so I think you guys get the point here. But let's keep going though. It's just pattern recognition. A lot of this is gonna be pattern recognition. So I want to call it out, mark it up every time. And I've just realized I should probably call out like the market structure shifts and the liquidity grab of it, because I've just been marking it up, bear charts, or talking about it, bear charts. But I could give you guys some better reference points here. So this is getting a little bit deeper into it, I guess, but this is the market. We would call this a market structure shift. Once price has manipulated and then came back to the downside, and then mitigated some imbalances and whatnot. We would call that the market structure shift once that price has distributed and came back to the downside. And this would be a good entry here. Didn't quite go as far as we wanted it to, but this is also at 11 o'clock at night, when on a Sunday going into Monday, mind you. So we wouldn't be trading at this point in time, but we can see the same thing played out regardless. But that's why we don't trade at Sunday at 11 o'clock. So same thing here, same exact thing here. This is 3 in the morning. This is London session. This is a perfect time. This is when we trade. So same exact thing here. I'm actually not going to mark up to AMD because we have accumulation right here, manipulation. Obviously, we take out these sellers and then go straight back to the downside and to sell off. Boom. So market structure shifts, and then again. 2R, didn't quite get 2R there, but again, actually you don't want to trade at 3 a.m. for NASDAQ. You want to trade at 9:30. And I might should have only showed you guys entries that were during the New York session from 9:30 to 12. But again, this is just an AMD video. Lots more to come. So we have. Oh, my neighbor's car just started up. My neighbor's car sounds really good, in case you're wondering. But so this is another example of this. Again, not at an ideal trading time. It would be ideal 3 a.m. for like currencies and whatnot, but don't really do London for NASDAQ. Now let's find one on the 1 minute. Oh. let's get away from that. Let's get away from that. I want to show you guys too many entries, right? Too many entries. So let's see. Let's do Thursday at, what do we have here? Oh, these are my entries from the higher time frame. That's what this is. Okay. So Thursday, New York session. New York session started here, ended here. Let's see if we have any examples of this going on during New York. So this is at the lunch period, right? But again, same thing, same exact thing. Accumulation, we manipulate to the downside, taking out any buyers that may have been thinking we're going to go up from here. We immediately buy, which is why we call it the manipulation. We took out buyers and immediately bought. That's tough, but that's what happens. And then we immediately buy to the buy side. Now, I usually trade on the we have a smaller one here. We have an even smaller level of accumulation, manipulation, distribution that occurred right here. And this is something that I would be definitely interested in taking. So let's mark that up. It's a quick markup, but no worries. And boom, 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 boom. 2R, like I would go for. This is why we like the 1 minute. It moves well, moves very well. As far as these little small day trades for accumulation, manipulation, distribution. But as you can see, the same pattern repeats over and over again. That's usually when volume is put into the market when this happens. Now, obviously, you want to trade at ideal times. We want to establish a little bit more criteria around this, as we found as we're back testing. You don't want to trade at 3 in the morning. You don't want to trade on midnight on Sunday going into Monday, things like that. So this video was just to show you the pattern, explain the pattern, draw the pattern, and just kind of walk through a little bit. I see we're at 30 minutes now, so got a little bit winded here, I guess. But yeah, hope you guys enjoyed this video. If you have any questions, let me know, and I will definitely catch you in the next one. Peace out.